Hello and welcome to this annual update on Saints, the Scottish American investment company. I'm James Dow, head of the Global Income Growth team at Baillie Gifford and manager of Saints. "2023 was dominated by headlines about inflation, interest rates, and geopolitical tensions. Ultimately, though, global economic activity remained robust and inflation fell, which means that interest rates may now have peaked. In that context, Saints delivered strong absolute returns last year, with a net asset value total return of 11.8%. The share price total return was a little lower at 8.2% as the discount on the shares widened, a factor which affected many investment trusts in 2023. On the income front, I'm pleased to report that 2023 marked an extraordinary milestone of 50 consecutive years of dividend growth for Saints. This achievement underscores our aim to deliver consistent income growth to Saints shareholders. Despite the company's strong absolute performance, the net asset value return did not fully match the 16% return from global equity markets last year. This was for two main reasons. First, our equity portfolio is designed for long-term dividend growth, which means we have somewhat limited exposure to the large US technology companies that significantly drove market returns last year. And then second, our small portfolio of property investments, which bring benefits in terms of diversifying the sources of Saints' returns, does not always keep pace with equities. Last year, the return from the property portfolio was actually negative, which dragged down the company's returns a little. Still, the equity portfolio represents the vast majority of Saints' assets and tends to drive performance over the long term. Last year, the total return from the equity portfolio was close to 14%. Two of the standout companies were Watsco, the American distributor of air conditioning equipment, and Novo Nordisk, the Danish pharmaceutical company behind the obesity drug Wegovy. Both of them delivered very strong earnings growth, which translated into strong share price appreciation, as well as good dividend growth. Over a longer time horizon, Saints' performance remains robust, with a net asset value return of 84.5% over the past 5 years, outperforming both the global equity income sector and the benchmark for global equities. Our strategy of focusing on income growth rather than starting yield has also been delivered, with Saints increasing its dividend at an annualized rate of 3.3% per year over the past decade. This has beaten the UK Consumer Price Index, or CPI, which has increased by 2.9% per year over the same period. That long-term compounding ahead of inflation is really valuable to Saints shareholders. In terms of portfolio activity, our approach is characterized by long-term investment and low turnover. The equity portfolio consists of about 60 investments, and during 2023 we divested from 6 of them. These included 2 companies, National Instruments and Silicon Motion, which were acquired by a competitor at attractive prices. Also a Chinese food business, Want, which has disappointed us on growth for some time, and the mining company Rio Tinto. Rio Tinto has been a long-standing holding and a very successful one for Saints, but we now see its costs starting to increase significantly, while demand for its product seems likely to weaken in the years ahead. This is unlikely to be an attractive setup for future earnings and dividend growth. During the year, we also trimmed the portfolio's holding in Novo Nordisk a number of times, as its very strong share price performance led to the position size approaching our 6% limit. We've reinvested that money in attractive holdings elsewhere in the portfolio, and in some cases in new names. We invested in 5 new companies in 2023: Home Depot, Coloplast, Diageo, Eurofins, and Texas Instruments. These new holdings are all well-established franchises with good returns on capital, attractive growth prospects, and strong resilience whatever happens in the world economy. We believe they will compound their earnings and dividends at attractive rates over the next 5 to 10 years. As we begin 2024, we remain humble about our ability to foresee what is just around the corner. Recent years have shown that trying to forecast economic activity, interest rates, or geopolitical developments is usually a fool's game. What we can say with confidence is that Saints owns a portfolio of assets that have proved resilient to some extreme tests over the past few years. Earnings have continued growing steadily, and despite the shock of a global pandemic, Saints has extended its track record of dividend increases to 50 consecutive years. Whatever happens in the world at large in 2024, as managers, we will continue our search for steady long-term compounding in earnings and dividends from those great companies all around the world where we can invest on behalf of Saints shareholders, aiming to grow their income and capital ahead of inflation.